Jerome Powell will speak at Jackson Hole today, a virtual Jackson Hole this week, rather, I should say. Tell me how you perceive the interest rate structure that the Fed has set. What has the Fed wrought on global Wall Street?
They have created a real speculative bubble, in my opinion. I have to admit that I'm uncomfortable at the present time not because of the virus. It's a factor. I'm uncomfortable because I'm focused on something the market isn't focused on, and that is the amount of debt that's being created. Who pays for the party when the party is over? You know, we just celebrated our 244th birthday, and basically it took us 244 years to go from zero national debt to 21 trillion. We'll probably end this year at 27 trillion. That is a growth rate in debt far in excess of what the economy is growing at, and I think that that's going to be a problem down the road.
Yeah, well,
and I think they've created a real speculative environment. You know, I was just looking, to give you some statistics. Apple announced their 4-for-1 split on July 30th. The 20-day average call volume at that time was 721,000 calls. Okay, this past Friday, Apple traded 2.1 million calls, 3 times the average of 20 days. Okay, and the stock is up 17% since the announcement of the split, and that's before this morning. Tesla announced their 5-for-1 split August 11th. Same thing, big increase in call volume. The stock is up 49% since the stock split was announced, against the S&P up 1.9%. Now, the last time I checked, if somebody gave me 5 singles for a $5 bill, it didn't create any wealth.
Right.
Okay?
Well,
it did not create any wealth.
That was the old calculation. Now this is the new calculation when you've got a big component of Robinhood investors. That's sort of one theory out there. What's riskier right now, the high-flying stocks or bonds?
Well, I think no question that bonds, to me, present a return-free risk. And that's what's working in favor of the stock market. What I have not fully appreciated is what a zero interest rate environment does for stocks. I was focused on the fact that we've had zero interest rates in Japan and Europe, and their stocks are 5 or 6 multiple points below the United States market. So I think low interest rates are indicative of a problem economy. You know, we've had artificial support for the economy since 2008. You know, it's 13 years. And I don't look at that as being a positive. I look at that as possibly being a negative. You're Stephen Ratner, close to Mike Bloomberg, who I have enormous respect for, basically wrote an article this morning in the Times op-ed piece, the economic recovery that isn't. You know, I think that the zero interest rates is creating a very speculative tone to the market.